All right, boys. Monday, May 8th. This is my first YouTube video ever. For a disclaimer, I do not sell courses. I don't sell anything from to anybody. I'm just here to put out some free content on how I made $3,000 in 3 trades in only 3 days. Now, that's roughly $1,000 per day. And I just want to show you guys that you don't need to be on the charts for hours and hours and hours. These are all about 10 to 15-minute trades that have made me about $1,000 in 15 minutes 3 times in the last 3 weeks. Now, I'm going to show you that the first trade was on April 12th. These are just multiple positions. April 12th, April 18th, and the 1st of May. Now, as you can see, these are all two lots, 5 lots. These 220 lots I placed accidentally, actually, and I had to cut them out real quick today. Now, the first trade that I want to go over is the one on the month of May, on the 1st of May. As you can see, I didn't trade at all. So I'm literally 3 for 3. I'm going to show you guys that these were the only 3 trades that I placed in this specific period of time. So the first one is going to be on the 1st of May. Now, why did I take this trade? First of all, you have to know your daily bias, your fundamentals, and etc. Since the 21st, since December 2021, we have been in a downtrend, right? Long-term downturn, making lower lows, lower highs. Now, especially with recent bank failures, inflation, all interest rates, all that's been going on, I have not been in the favor of taking longs. I have been shorting recently. Now, if we break this down in a 1-hour chart, 3 trades that I took, right? First one is on 1st of May. Now, why did I take this trade? Now, if we see on the hourly chart, we have been rallying to 4,200. Now, we rejected with some nice volume in the 4,200. So I have been looking for sells here. Now, what made me take this sell exactly would be where did it go? There you go. So we got a huge sell-off from 4,200, right? Look at this candle with some really nice volume in the middle of the day. So now I'm automatically looking for sells. So in order for that day to be red, what does it need to be below? The previous day close. That's the only thing. In order for any day to be a red day, it has to be below the previous day close. Now, where was my entry here? Right at the close of this candle, right? Why? Now, if we go back on 1st of May, this is on Thinkorswim. I actually chart on Thinkorswim. Look at that rejection from the previous day close. That is the previous day close. Amazing bearish engulfing, and that's exactly where I got in with stops above this candle. Now, if we see that would as my entry would be right here, right? It's the break of this candle, stop above, and aiming for previous lows, right? We got out right here. Now, that is the first trade that made me about $1,000. Now, if you see this, if we put our stops above the candle, which I usually do, right? We actually never got have stopped out. We could have taken this all the way back, all the way down to 4,100, right? for an insane 1 to 27 risk to reward ratio, because it is a big psych level rejection. And even in the next day, we still didn't get stopped out. But that is unfortunately a hindsight trade. And that is exactly my entry, my exit right here in these lows. That made me roughly about $1,000. Now, that is the first trade. Second trade would be on April 18th. So if we scroll, you can see I still haven't taken any trades in almost 10 days. No trades. I was busy with other work, businesses. So if we see April 18th, right here was the next trade that I'm about to go over. Now, if we take a look at this trade on the April 18th, right here. Now, why did I take this trade? This was also a very similar trade because we are rejecting. He went up to 4,200 pre-market, right? Flushed all the way back, we were finally making lower lows, lower highs, higher highs, higher lows. And once we made that first, we broke this low. So now we're in a downtrend, made a lower high, flushed all the way. So I was looking for sells all day. Now, we see we have a clear supply level right here, right? Which also perfectly aligns on April 18th. If we see last 90 days, what happened on April 18th? Right here. We were rejecting the previous close beautifully. You see this engulfing right here. So I took it on the first, when we came back to this demand level, I had my first entry on this huge red candle with some nice volume and this demand level, supply level right here. So that was the first trade. Now, if we actually take a look, that same supply level sort of got respected again on the next trading day. Now that goes to show you that if your technicals are right, they should be respected. You could have taken the same trade all the way back to previous day lows and made a nice return. Now that was the second trade. Now the third trade was on the one on April 12th. Now April 12th is special because this was CPI day, right? So when there's days that have news, especially CPI, we have to be careful. Now anyone that trades CPI knows how CPI days usually are, right? If we take a look right here. Oops, that was my bad. Now, so this is the one on 18th of April. 12th, there you go. Now, why did I take this trade? We see liquidity being swept, first of all, right? In the 15-minute candle, right? Last week's high being swept, right? We got over last week's high as soon as that 8:30 candle got announced, the news candle, right? And we closed below it. So that already gave me enough signals, because liquidity got swept. Now we have to drive price down. And right here. So if you've seen price action on CPI days, you know that once we see a candle like this, the first direction is usually false, right? We tend to fade, that we make that first fake move and fade out towards the next trading session. Now, we saw liquidity being swept, last week's high, and then we continue to flush, lower low, lower high, make lower lows. Now, why did I get in on this candle, right? As soon as this candle closed, I entered. We got above, was in drawdown, closed back, entered again right here. Why did I enter? Because when we make lower lows, right, and we retrace, we see if it can reject the previous low, which is right here. And as we can see, a beautiful rejection that got respected later out in the day too. We got in on this bearish engulfing. If you guys want to know what that is, I have to make a separate video, so subscribe and let me know if you guys want to see that. And had targets way below here. As you can see, I got out right below, right here in the where we could see possible reversals. Now that was the first trade, and that exactly is how I made $3,000 in 3 trades. Now, if we actually draw this demand supply level right here, once we broke above it, right, we broke above, retest, we see this hammer candle, and we could have rode that all the way again up to that high for a nice long as well. Going back to what I said in the previous trade, if your technicals are strong enough and if you know how to draw them correctly, they should be respected even on latter days. Now, if you guys liked these type of videos on how I break down these trades for you guys and show you exactly my thought process and everything, leave a comment down, leave a like for the boy, and I'll be back for more. Thank you guys for watching.